Okay, well, welcome to all those that are joining us online. You'll see as we go along, we have some guests today, so please hang on because it's going to be fun. All right, I did that. Get rid of that. I don't think I closed it. Still there. Good news. Go over to the class and we will get started. So today we're going to be talking about really the most important part of starting a business. As exciting as marketing and employees and building a business plan are, at the end of the day, it is all about finances. And so we're going to be talking about financing, banking in particular. And we're blessed to have with us today two banking professionals. A live banker, as I said right there, presentation, a live banker. We've got from Huntington Bank, we've got Victor Navarro and Cristina Vasquez Fuentes are with us. They are going to be talking specifically about Huntington Bank, their products, but also in general about when you go to see a banker, what do you need to be prepared for? Because when you go, it's a lot. It's like going to the dentist. If you're kind of ready for the whining of the drills, and the smoking, smoking enamel, it's a lot easier than if you walk in and go, okay, what do you need? If you go in prepared, it's going to be a lot easier. And these two are going to be able to walk you through that process, talk about all the things that Huntington offers, but specifically about going to see a banking professional and what you need to be ready for when you come to see them. So I'm going to do my best to get their presentation up and running. Please. There we go. Okay. All right. I'm going to step out of the way and I'm going to let Victor and Christina get started.
Perfect. Thank you, Jeff. Good morning, everyone. My name is Victor Navarro. I'm with Huntington Bank. I am a community lending relationship manager working through our business banking side, and I work directly through our Lift Local program. Our Lift Local program is pretty much provides education. It provides resources for entrepreneurs as they start their journey or continue through the journey of growing their business. I am joined here with Christina. She is our branch manager. I'll let her introduce herself.
My name is Christina. I've been in banking for 20 years with Huntington and actually at the Shorewood location. So I'm your local branch manager and business banking professional. So if you ever need anything specifically, I would be your face. So I have business cards and some flyers to hand around for those that came on today.
Perfect. Christina will go over some of the resources we have, some of the deposit and the lending resources we have towards the end of the presentation.
I'll let the Victor do the educational part here, and then I'll do over like a little bit of the products and services that we have to offer.
So today we're going to just kind of discuss. Jeff did a great job as far as kind of analyzing and comparing what it is as far as the dentist when you're going for asking for capital. So today we're going to go over a couple of things. Financing your business. We'll go over the different sources of capital that are available to you as an entrepreneur. Interviewing funders, partnership matters, relationship matters, and then becoming application ready. Understanding what it takes to be at the level so that you're ready and you're taking on that task of asking for capital. So we'll kind of just go high level as far as what you need to have to be prepared for that as well too. So as you're growing, you're an entrepreneur, or maybe you already have your business established right now. One of the key things right now is actually getting funding for your business, understanding where it could come from, understanding what you need, and what is going to be needed to actually get started and move your business forward. We're going to go over high level different types of capital sources that are available to an entrepreneur. Going to go into little details to what it means and how you kind of get it. But we want to just kind of educate as far as knowing where you could go to be able to grow your business. The first capital source that you see is bank finances. So this is our typical banking products. So when you come to the bank and you come to ask for a loan for your business, you either get something like a line of credit that's going to be able to support your short-term needs, payroll, working capital, things of that nature. You might need a term loan, conventional term loan, to be able to buy equipment, to be able to buy vehicles, to buy inventory. And these are the things that kind of give you the very conventional products. So these are bank products that you go and the bank will give you to be able to fund your business. Now, Loan underwriting will assess the ability to repay. So how easy it is for your business to pay this loan back. And then that would be the main factor to determine whether or not they're able to lend that source of capital to you. So that's the main source of capital that you probably end up seeing when you go to the bank and you're asking for funding. The next source of funding that you see there is SBA financing. So SBA financing, Small Business Administration, they offer different programs through the government so that you're able to start your business or continue or have your business continue growing. They have different lending programs like the 7A program, the 504 program, the microloan programs, and other various different programs as well too. Now, this is a federally backed financing program for small businesses designed to meet financial needs such as debt refinancing, surety bonds, and equity financing. So the pretty much with the way I like to compare the SBA on the business side is kind of like the FHA on the personal side. So the government backs up the loan so that the banks can actually lend out a lot more because we have the guarantee of the government that if for some reason something were to happen, the SBA or the government will pay the bank back, reducing the amount of risk that the bank takes. So that's why the SBA is very, very important for small businesses because they give us the ability to be able to lend to more people and more entrepreneurs. Question.
And do you mind if I
of course, yeah, be as interactive as you can. Yes.
I've already made a lot of the mistakes these guys are considering.
Okay.
So with SBA financing, do you have to actually own property to get an SBA loan, or can it be done? Can other things be financed through the SBA?
Correct. So you do not have to own property. So that's why there's different programs with the SBA. Some programs do require property, other programs do not. 7A does not. The microloans usually do not as well either. It could be as we're financing, again, inventory. We could finance working capital like payroll, rent payments, inventory, vehicles. So it doesn't necessarily need to be tied to a property. Now, SBA and most banks, whether it be a banking product or banking financing or SBA, if there's no actual like title or property, they will just take a uniform commercial code, which is a UCC, that they file with the state, letting them know that we're taking the first lien on all business assets. So they'll take some type of lien on it that gets recorded. UCC is filed with the state level, basically telling anybody else that's looking to lend to this entrepreneur that there's already a loan outstanding. Think of it again. I like to compare it to personal because we tend to have a lot of personal financing experience. But think of it as in a mortgage side, you have a title to the mortgage. First lien is going to be your first mortgage, and whoever wants to lend to against that property even more will have to go into a junior lien position. Same thing with lending on all business assets. We will record it with the state first lien, and if anybody wants to lend, they'll have to take a junior position on that as well too, which they can. But that's how we kind of guarantee ourselves as well too. We take all business assets at that point, but does not have to be property involved. Okay. Yeah.
What do you mean? If everybody want to learn, they gotta take a junior permission.
What's that?
The last word you say if everybody want to learn, they have to take a duty.
The junior position.
The junior position, like a second lien. So if something would happen with the business, and they had to liquidate all the assets of the business, whoever's in the first lien position will pretty much take majority of those assets for the repayment of the loan.
Okay.
If there's anything left over, then the junior positions, the second, third lien position will get funding from there.
So
Sure.
Victor, in that example,
Sure.
is it kind of like you buy a home and whoever has the mortgage that's the primary position that
Right.
the SBA would be. Then if you get like a home equity line of credit from your credit union to someone else, they take the junior position. Is that the same?
Same concept, yes.
Okay.
The same concept, yes. So in the home example, if the property is worth $100,000 and the first mortgage has $100,000, and for some reason another bank lends you $30,000, and there's not enough equity, that second lien position, that second bank will have to take a loss. So that's why the importance of being that first person or that first entity on that lien holders. Okay. Perfect. Going into the next source of capital, community-based organizations. So local, state economic development organizations, community development corporations, community development financial institutions, and small business incubators accelerators. So these are your community organizations. Junior college right here with the entrepreneur program they have here. that is an entrepreneur program. I'm not sure if you do microloans or not, or you do lending.
We do not.
Okay.
We do not. But as you know, we also partner with LADA, and so it's another community organization that's very important.
And then one of the things that I kind of like to stress out, and especially with the community partnership, is because building the relationship with the community partnerships and your banking institution. Very important to build those partnerships. As you progress through your journey of growing your business, these partnerships are going to be very crucial to you because these are people you can lean on to be able to ask questions. If you have doubts as far as where your business is going, you can ask more questions on that. If you need resources, these are the organizations that will be able to provide those resources for you. So like I just mentioned right now, as a bank, if you were to come to us and let's just say that you're asking for capital and we're not ready to be at capital because for some reason there's an obstacle that we have to overcome, we will rely on our community partnerships like Junior College, LADA, to be able to help the business out. You know, we don't like to say no. We like to say, look, no, this is your goal. We're going to help. We're going to do everything we can to be able to help you achieve that goal. But there might be some time between getting lending and being prepared for lending and actually getting the lending. So that's where we rely on our community partnerships. Very important to develop those partnerships with your community lenders because, your community organizations, because they have other resources as well too. Like Jeff just mentioned right now, they don't do the micro lending. So they work with LADA. They have other resources. So very important to build those partnerships. But when it comes to community-based organizations, so a lot of these they often have the ability to leverage various financing options, such as grants. They have micro loans, small loans from $1,000 to $3,000 that they can offer to small businesses as they're growing. So again, that's another source of capital that you may see as you're growing your business. A lot of times, if you go to the bank and you say, "Oh, I need $1,000," some banks will not lend it that low. So keep that in mind because the community organizations may have a micro loan for $1,000 that they can lend to you. So keep that in mind. Again, building that relationship with your partners as well, it helps as well. So the next capital source that you might be able to see is your self-funding. This is money that you have yourself. So you're investing into the equity, you're putting yourself into the business. So this could be anything from your own funds, your friends and family that really value your business and want to say, hey, I'm gonna put this money into your business. Factoring institutions. So factoring is pretty much where if you have receivables, you can have a company pretty much own those receivables and you get paid right away. And they take the responsibility of invoicing those receivables. You take a cut on your profit because you're getting that money faster, but again, you're able to cash flow your business a lot better. So that's another self-funding kind of capital source. Trade credit from vendors, customers, so peer-to-peer. Some of your customers, as you're doing business, may finance or may borrow you money so that you're able to get more inventory. As you're selling your inventory, you're supposed to pay them back, and vice versa. So it makes it really easier for you to run your business. And then leasing. So this capital source is using money and other resources outside traditional debt equity options. There's little to no debt borrowed, no equity positions in company given up. Basically, there's no UCC filings. You own your business completely. You're not giving up any of your equity of your business either because it's money that you're putting in yourself.
So and this is something, again, I'm learning as I go, as you guys well know. I've been doing this for a year, but I don't have any inventory. My whole business is basically in my head. And so when you're buying inventory, you can get the person who sells it to you to finance it for you. Does that help build the business credit of the business as well?
So most companies that do offer that type of I said financing, but yes, yeah. They report to Dun & Bradstreet any basically your repayment history. So Dun & Bradstreet is pretty much the credit agency of businesses. What's being reported there? Think of it as kind of like the Experian, the TransUnion, and the Equifax. Your ability to repay is being reported there. Now, I won't say that all companies will report it, but most companies, a good majority of the bigger companies will. So if you're buying inventory from XYZ company, it's a big company, they will report that as well. Yeah, so that's another way to build credit on your business.
because it seems like that's always an issue for these new small businesses. They need to build a credit history as the business. And so like, does Huntington offer credit cards?
We do, yes.
So would you advise them to get like a business credit card again, just to try to begin to build some credit history through their use of it?
So we will go a little more into detail
Okay,
as far as,
okay.
yeah, you're jumping a little bit ahead, but
Okay.
when you come to bankings and pretty much a lot of the majority of the banks, we do use the business credit as as a factor to making decisions, but majority of the decisions can be based on the the owners or the guarantors' personal credit history. So yes, it helps to build that credit, especially if you're looking to do trade between companies. That Dun and Bradstreet is going to be huge for your business. But if you're looking to get to capital sources like lending, loans for banks, or even the micro loans, the personal credit history is going to be the biggest factor that plays into the decisioning of the loans itself.
Just establishing it, or maybe they've had like things that have happened, bankruptcy, or just whatever in the past that they were high, now they're low, and their personal credit is not the greatest. How do you recommend that they go about that to be able to do a loan for their business?
That answers that question. We as Huntington, we do offer secured credit cards. And again, a secured credit card is pretty much, it's all about building up that credit again. Through a secured credit card, you put money aside, the bank holds that money while you're using that credit card or utilize that credit card, so that then you start building up that credit again. Usually about 6 months later, that's when we see the credit increasing. At that point, we could apply for it. Again, getting application ready and understanding your credit is big. Understanding that you have those obstacles or those challenges and overcoming them early on before we ask for credit is big. Christina can talk to the secured credit cards that we have.
Yeah, I mean, we'll go over like products and services after like
The
Victor's done with his presentation, but more than anything, I have a program that specifically works with low credit requirements. And so I want to go over that with you guys as well, so.
But I will also say this: if for some reason, as a bank, we have resources, but obviously as a bank, we're also limited to resources. We rely on our partners that we have, whether it be the entrepreneur program or through our other community partners that work specifically with credit rebuilding. So again, we will kind of utilize those resources to make sure that we put you in the right path. So, okay. No problem. Next type of capital that you may encounter as you're growing as you go through your journey of growing your business is venture capital. So venture capital is pretty much is an entity that provides money to seed early stage or emerging companies. Venture capital funds typically invest in exchange for ownership stake and a seat in the management table. So when we think of venture capital, just keep in mind, as these companies are investing in you, you're giving up a certain percentage of your equity in the business. So right now, as you start your business, day one, you're 100%, well, I'm assuming that sole owners, but you're 100% owner of your company. This company may come and say, hey, I will invest in your company. I will give you X amount of dollars, but I want to take 10% or 20% of your business. You're still owning the majority of the business. You are still making the majority of the decisions, but now you have a partner that you have to kind of work with. And any decision that you want to go forward will have to be obviously the decision made between the partners, that partnership. When we say venture capital, I like to kind of describe it as what's that show? The show, what's it called?
Shark Tank?
Shark Tank. Thank you. Yes, Shark Tank. They go in, they make a presentation to the whoever is seated at the chairs, because it's different sometimes. They go through a presentation and they say, I want X amount of dollars for X amount of equity in my business. Think of it as the same thing right there. That's venture capitalist. They listen to the proposal. They say, yes, but I want more, or yes, I'll do it at whatever you want. Majority of the time is I want more equity because, let's be honest, we want to make more money, right? But think of venture capital as that. There is that option for your business to grow using venture capital as well. Angel capital is generally an affluent individual who provides capital for business venture in exchange for convertible debt or equity in the company. So angel and venture are pretty much the same thing. The only difference is with the venture capital is a company, angel capital is an individual that's providing that equity injection for you. Again, you're giving up a certain amount of your business to be able to grow. I'm not saying it's a bad thing. A lot of times taking on that investment will help you grow your business more, but I would generally say try to see what other options are there first before you start giving away equity of your business. Because at the end of the day, you're going to work hard to get this business off the ground. You do not want to give up that equity because at the end of the day, to get that equity back does become a little more. Yes, correct.
With the equity, so that, right?
Hmm?
Like giving it out, can you do it to like a certain amount of time as you're building your credit, or is it like indefinitely?
So
Business.
normally, generally speaking, with these type of venture capitalists, it's an indefinite, unless you put in the contract, but then you would have to return the equity back. One, and at least the way I've seen them is, and it's structured is you return the equity back, which is usually more than what they originally gave you. And in the meantime of that time frame, you're paying interest. So it's all written in the contract. It's harder to get that equity back. But just keep in mind, when I say equity, the equity in your business is pretty much 20. If you just say 20% you're giving up that equity in venture capitalist, they own 20% of whatever you have in the business. If you have equipment, if you have vehicles, whatever it is, they own 20% of that. And then when you're doing your taxes, at the end of at the bottom line, whatever the net profit is, they get 20% of that because that's the equity in there. So that's why I say try to find other sources first before you dive into this venture and angel capital. You would determine that. As an owner, you determine how much of the equity you're willing to give up for the amount of money that you're trying to get. So another source of capital is crowdfunding. This has become very popular nowadays. Kickstarter, GoFundMe, Indigo are some of the more popular ones when it comes to equity and capital sources. So this is just a funding of a project or venture by raising small amounts of money from a large number of people, typically via the internet. We've heard of the GoFundMe. People pretty much put a GoFundMe page out there. I have this business. I need money. They put a goal on there, and people start investing into that. We're not investing, but they actually start giving to help you grow your business. It's good. It's a good way to raise money, but it takes time. If people are donating $10 and you need a goal of $10,000, how many people do you need to be able to fund that? It's a good. I'm not saying it's bad, but it just know that you need the time to get to that stage that the goal you're trying to get at.
Is for the crowdfunding, is that sort of no strings attached? They're just like, you know what?
They're usually
I like your video. You've got a nice dance move. I'll give you $20.
Correct.
And so they're just giving you money.
Correct.
Okay.
Yes.
I like that better.
The other side, another source of capital is the micro financing. So this is through usually like Kiva or Acción. Leda probably works with both of them as well too, but they're just smaller organizations that work through micro lending. They have like a small bank, or they have small amount of money that they can lend out to community. Normally, that's where we usually, if we can't lend for whatever reason, they have more open guidelines when it comes to lending, where sometimes at the bank level or as SBA level, they're more regimented where, this is where we can lend. And if we're out of this box, I hate to say the box, but then they are able to, like an alternate financing as well too. They're able to do a little bit more because they may not look at the credit report, personal credit report as in depth as we do. Or they may not require X amount of information like we may have required in information. So these are the organizations that will be able to fund your business as you're growing. Normally, typically, like I said, there are smaller amounts. They're not huge amounts, but it's another way for you to fund your business as you're growing. The last one that I have here is fintech financing. So these are non-traditional companies that use software technology to provide financial services. The one that comes to mind right now, Discover. Discover has a small business lending program where you can apply through them. There's no bank whatsoever. Everything's done online. So this is kind of like the fintech financing because you don't have a personal representative that you could go to the bank, ask questions, understand, have them understand what your business is trying to do, and have them understand your plan. So it's just all online. They lend you money, you pay them back. Normally, very high interest rates when it comes to these, and the repayment structure is a lot quicker as well too. But again, it's worth, I guess, investigating, understanding it more. But fintech financing, like Discover, Amex does it as well too. Capital One, I believe, does it as well too. So just non-traditional, non-bank structured financing. So these are some of the capital sources that you may run into as you're growing your business, as you're going out and asking for funding, asking for money to get your business either started, get your business moving, or looking to grow your business even more or expand your business. I'm gonna stop there in capital sources. If you have any questions on the capital sources, maybe online as well too. I'm not sure if we were able to see online.
Yeah, actually, I just checked and there's no chatting allowed. So
Oh,
if you have the questions from us now, I actually never heard of the fintech financing. Is it kind of like, I'm gonna say credit card, but it's more like that.
Square uses fintech financing a lot, where they will use your receivables as, so basically the way Square does it is they'll lend you X amount of dollars, and as you're swiping and you're collecting as you're collecting receivables, they take a portion of those, and then whatever's left over they put in your account, and that's how you repay them back. So Square does that a lot.
They look for themselves.
Yeah, of course.
I didn't really, I know that we've worked, is SEO, is that Allies for Community?
They have, it's a different, it's through Allies for Communities. So Allies for Communities is a different organization.
Okay.
Action is an actual organization that does the microfinancing.
Yeah.
So
we have worked with both of those organizations
Mhm.
over time with our clients because, again, not everybody ends up with traditional financing, and so could be $5,000, $10,000 probably max, but there's other ways to get around this, and these are fascinating.
So, and again, I think Justice said it best. There's other ways around traditional financing that you may uncover or explore. I technically recommend work with your bank first. Build that relationship with your banker. The better relationship you have with your banker or the manager or wherever you may bank, the more seamless the process will be as you engage on taking on different, asking for different capital. They are able to guide you. Most managers, I speak for Huntington ourselves. Most of our managers are trained for business banking, where they're able to answer questions that you may have. We've gone through so many scenarios. We work with all different types of businesses, whether it be trucking, whether it be food service, whether it be retail, whether it be whatever type of industry it is. We work through the specific scenarios. And if we don't know, we have the different resources within our organization that we could ask to be able to answer questions you might have as well too. So that's why I say building that relationship is very important as you're seeking to ask for capital. If for some reason that capital source is not available because of whatever obstacle may be, we have resources that we can refer over to different organizations to kind of build upon those resources. One of the things that we need is a good business plan. If you do not have a business plan, we have the resources. We have the entrepreneur program that they will work with you as far as building a business plan. We will get you to that point that you need to get to. But again, have that relationship with your banker so that you're able to have the questions. Questions at capital sources, different type of? No, perfect. So we're going to move on to understanding which capital source is right for you. You kind of touched on it right now. Again, building a relationship. Find someone that you like and trust. Again, they're your partner. As you start building your business, as you start growing your business, this person is going to be pretty much hand in hand with you to be able to answer questions and be able to guide you into the next steps that you may be needing. So finding that someone that you like and especially trust is very important, very crucial. Ask questions and expect timely, honest, understandable answers. you're starting your business, and a lot of times you don't know what you don't know. Very important to ask those questions. Do not stay quiet, because if you don't ask those questions, maybe someone else is gonna have that question. But if you don't ask those questions, no one's gonna know. As community partners, as banking professionals, we will answer any questions you may have. But sometimes, we try our best to make sure that we are giving you all the information you need, but we'll miss something. And if you have that question, just don't be afraid to ask questions, and just ask it, because we will be able to have an answer for you. Be open to feedback and options. Very important. As you're presenting your business for capital sources, sometimes within your business plan, or there might be something in your business plan, there might be something in your projections that as a professional may not equate well. So we might provide feedback, whether it be ourselves or the community partners. We might provide feedback to basically get it tailored to what we feel like might be the best avenue for you. We've seen situations where people are anticipating $1 million in revenue the first month. As a professional, and the first month to come in and off the gate and make $1 million in the first month, it's difficult. Just being honest. So we might ask you to kind of be a little bit more realistic. We'll probably guide you as to where the revenue is coming from, how you plan to generate it, how many hours you have in a day to be able to generate the revenue, what kind of expenses you're looking at. So be open to that feedback and the different options that may be available for you as well too. You might be going into the bank and say, hey, I need a line of credit for emergencies. As a startup business, lines of credits are a little bit more difficult to get. But when we talk about different options, well, maybe let's not do a line of credit. If you need specific working capital, let's look at a term loan, maybe to finance some of your payroll, maybe to finance some of the rent, some of the inventory, where it's not really a line of credit, but we're getting you some of that cash flow so that you're able to start your business and grow your business further. So be open to those options as well. Select a person, capital source, and structure that best meets your immediate and long-term needs. Going back to building relationship. That person might be able to fulfill your immediate need right then and there, because you're looking for a loan. But are they going to stick with you through your progress, through your growth of your business? That's the important thing. You want someone that you can rely on. A year down the line, 2 years down the line, you might be outgrowing your space. You might be outgrowing your equipment. And you need to be having those conversations with the banker, and they need to be there with side by side, so that when the time does come, it's not a surprise like, oh, you need more? No. Hey, now it's time. Let's get these rolling again. So again, just make sure that they're there with you for your long-term needs, and understand your goals as to where you're trying to go. All right, we're going to discuss right now how to become application ready. So you decide on this capital source that best meets your needs: bank financing, SBA, micro lending, whatever it may be. So how do I become application ready? How do I have a package together to be able to go to the bank and present to them, so that they see that I'm, one, prepared, and two, understand what my needs are. So key requirements, okay? And I can't stress this enough: have a plan, have a business plan, okay? So this is your chance to communicate the story of your business. What is your value proposition? What differentiates you from others? How is your business different from another business down the street? You want to be able to depict that in your business plan. Is it critical for you to have? It is very critical for you to have clearly defined business plan and outlines how your operations and financial positions align with goals and objectives in a logical, readable format. Understanding this is your time to tell your story. So this story has to tell the bank, or whichever capital source you're going to, what you're trying to do, what you're doing, how you're going to do it, and how you're going to get there. So how are you having your management in place? Who's going to be helping you with build the business? Is it going to be yourself? How are you planning yourself to be able to manage the business? What kind of marketing strategy you're going to have? Because at the end of the day, we need a way to kind of get our product out, or our services out to the public. What is that strategy behind that? So very important to have that business plan in place and understand exactly where you're looking to go with your business. Another key requirement is understanding your personal financial health. We kind of touched base with Jeff, and we kind of touched base with as well. A complete personal financial statement to assist understanding your personal financial position, Understanding your personal credit score, what it means and conveys. If there is a story to tell up front, tell it up front. You mentioned that so where someone has bankruptcy. You know, as a banker, we want to know that right off the bat, so that we're able to, you know, at the end of the day, as bankers, we can only tell the story that's being told to us. So when the underwriter is looking at our story, if that wasn't brought up and they're asking us, "Oh, would you declare bankruptcy?" I'm like, "Well, I wasn't aware of it." So very important to bring that up right off the bat. And then also because sometimes there's different guidelines that may not allow us to proceed. Normally an SBA 7 years after bankruptcy, we can actually look into financing a business with an individual that has that bankruptcy. But there are other programs available where it might just be 4 years. The faster we know about this information, we're able to kind of structure and guide the conversation in that direction. Understanding your, I'm going to touch base on this one as well too, because understanding your personal credit is very big. Most banks will not look at your personal credit score. They're going to look at your personal credit history. What kind of debt you carry, what kind of utilization you have on your personal credit, how much of it is revolving debt, the mixture of the debt you have, how your payments have been made. All of that encompasses what the bank's going to utilize to be able to determine whether or not they're able to lend for the business earnings, along with any business credit that you may have established as well too. So understanding that is always very important as well. If there's any challenges or obstacles that we have to overcome, we'll overcome them. We have resources available through different organizations, through different community organizations that can assist with that as well too. So it's very important that you just kind of upfront and allow us to understand that as well too. Ensure you have an understanding of your company's financial standings, current financial needs, and potential future needs. So to properly assess a loan request, the bank will typically require for the following. So a full package for the bank will be the following: 3 years of financial statements if your business has been established already. If it's not established at the moment right now, that's fine. We will not require that. We will need projections, okay? If you're a startup business, you're barely getting your business off the floor, we would need 3 years of projections on how you see your business growing month by month for the first year, and then the following 2 years, year by year. We want to see how kind of revenue you anticipate generating. We want to see what you anticipate your expenses being, and we want to see exactly what your bottom line is going to be after all the expenses are paid. This just tells us a story of how you're thinking the money's being generated. We require personal tax returns for the last 3 years, your personal financial statement, and an aging receivables payable account if you have them. Again, if you're an established business already, and that's basically what's money coming in and what do you anticipate money going out in a 30, 60, 90 days time frame. The next requirement is the ability to demonstrate the ability to repay debt, adequate cash flow. Okay, this is important for the bank because we want to make sure we're lending to the right person, and we want to make sure there's enough money being generated for the business to be able to make a loan. If there's not enough money being made from the business, maybe reducing the amount we need, understanding where the strategy may be to increase the amount that you may make. Just being able to demonstrate that from your business, being able to pay the loan, because we want to make sure at the bank we don't want to set you up for failure. We want to make sure you're successful in your business, and we want to make sure that there's enough money to be able to, one, operate, and two, pay the loan back as well too. Know what collateral and or equity you will be injecting to the deal. So think of this as your skin in the game. Okay, this is your equity that you're putting into your own business. We want to make sure that you're able to, if we're going to lend money, we want to make sure that you have some type of equity in there as well too. Most banks and most products will require you to have at least 20% of whatever your project cost may be. They want to see that injection on your side before they will lend out to lend out from the bank. And this is just your way of showing to the bank that you're committed to your company, and that you're willing to put a little bit of your own skin into that, so that we're able to lend through you as well too. So most banks will secure their loan by having the business or the owners pledge collateral. A type of collateral pledge and how much is needed varies based on the loan requesting type. Equity may be required based upon the loan type. For example, a bank may require the owner to have some of their own money in the deal to ensure collateral covers the loan amount, or is to reduce the loan amount to keep payment lower. So again, their skin in the game is what we're looking at right there. Another key requirement is understanding the 5 C's. Character, capital, capacity, collateral, and conditions. Okay, those are the 5 C's of credit. That's whether you be on the personal side or the business side. So character is you pretty much use your personal credit history to determine character, the ability to repay. Capital is the money that you're looking to put into your equity injection. Capacity is the ability to repay, making sure that you have the ability to make the payments. The collateral, what are we putting as far as skin in the game? So whether it be all business assets, houses, vehicle titles, things of that nature, and then the conditions. What kind of conditions are we currently living in? And other things that may be determine what the loan how the loan may be structured as well too. So just understanding that as well too, because banks will look at that. Prepare a complete package for the bank to review. And we kind of went over that already as far as the 3 years of projections, the personal financial statement, business plan, very important business plan, making sure you have business plan because that tells us what you're looking to do. And then lastly, the key requirements, be prepared to be interviewed by the bank, okay? You presented the whole package to us for capital. You want money. We want to give you money. We're a bank. We want to lend out money. But sometimes within your package, there might be some questions that maybe need to answer. And just understand that, as a banker, you're going to be interviewed. You're going to ask questions that were not answered within the business plan or your projections. They're going to clarify information that was not in the application, and then assess your ability to execute on your plan you provided. So you might ask a lot of questions regarding that. So one of the things that we like to do as well too right now is kind of go over some of the questions you might see as you're being interviewed by the banker. So these are some of the questions that the banker may ask you as you're requesting some capital. Now, hopefully, you've already developed a relationship with your banker, where your banker already knows some of this information. But you might go into different banks, and they might start asking you different questions because you may not have a relationship with them. So some of the questions they may ask you are, how will the business repay the loan? Is it going to be generated from the revenue? Is the cash flow more than the debt payments? Is there enough money net to be able to pay the loan back? How will you repay the loan if the business fails? So that's an important question. We hope that the business flourishes. We hope that the business grows. But what if it doesn't grow? What if it doesn't succeed to the point where you want it to succeed, and you need to kind of close up shop? What's the plan after that? How are we looking to pay the loan if it does fail? How does the business collect its bills? How does the business pay its bills? How's money coming in? How's money coming out? That's a question that you should be asking you, regardless if you're doing a loan or not. They want to understand your business. How does the business control its inventory? Do you buy on a month to month? Do you have X amount stored already? How are you controlling that inventory? How does the business control expenses? Are the officers committed to the business? How committed are the officers or the owners yourselves? How committed are you taking this as a part-time job? Or are you currently employed and you're going to leave that job and you're going to be working on this completely? It's a good question that they may be asking you. What are the business plans for succession? Once you finish your business, who's going to take over? Who's going to be running that business as you mature and you're looking to get out of the business as well too? Does the business have profitable operating history? And this is if it's already been established already. Year over year, have we been making money? Year over year, have sales been growing? Is there a story to tell here? Did something happen in the market that created a story for us where it's not been profitable? Are sales growing, shrinking? Are profits increasing as a percentage of sales? Is there discretionary cash flow? Is there money extra that you have not accounted for, that you're not accounting for, that you're leaving in the business? That's discretionary cash flow. That you have extra money that you could play with, so that you could maybe take on more inventory in the form of a loan, new vehicles, new equipment in terms of loans. What is the future of the industry? How well do you know your business? I mean, where is the business going as far as the market? And then who are your competitors? Who is your competition? And what are the strengths and weaknesses of them? These are questions you're going to be asked. The more prepared you are in having answers for these questions, the better, the seamless the process is going to be for you. And this should break down some of the barriers when you're actually having that conversation, because you're a little bit more prepared for the questions that are going to be coming at you. So it's not as intimidating to go in and ask for the different types of, for the loans that you're looking to get. Now, just as the banker's asking you questions, you should have questions prepared for them as well too. Okay. Some of the questions that you may want to ask your banker: how do you make your lending decisions? Is it made in-house? Is it made from a different office? Who's making these decisions? It's very important to know that. You know, sometimes some banks will have centralized underwriting where, you know, as a bank, we take in the application to the branch, and then it goes to central underwriting where they kind of review all the information and they make a decision there at that point. What is the most important factors in determining whether or not a loan will be approved? That's important for you guys to know. You know, do I need a certain credit score? Do I need a certain years of business? You know, as a startup, there's a lot of banks that don't do startup loans. So that's a great important question. Hey, I'm a startup right now. Will you be able to lend to me? Well, no, we need 2 years of business. Okay, great. Probably not in that action you want to continue going for that loan that you're looking to get. Probably it's time to move on to the next bank that may be able to do a startup. Will you be able to flex and grow with my business as a business needs involved? Yes, this is my immediate need. We kind of talked about it earlier today. This is my immediate need now. But 2 years, a year, 2 years down the line, if there's growth in my business, will you be able to assist me with that growth? You know, that's an important question. You want to see that relationship building. How can you help me manage my cash flow more efficiently? Banks have different tools, treasury management tools, credit cards, merchant services, payroll, whatever it may be, to be able to help you manage your cash flow. Sometimes we think of capital as being a loan, when in reality, it might just be being more efficient at collecting money so that you have that money in your account a lot faster. That might be the cash flow that you need, the capital you need to be able to make your business grow. And the bankers will be able to assist with that. How will you interact with me and my business once the loan is closed? Am I just a one-stop kind of shop where my loan closes, I'm done here, we'll move on? Or will you stay with me and continue providing me more information about my loan, about my industry that may be able to be more beneficial for me? Where are you going to stay in the process with me? Again, it's all about building that relationship. Questions specific to a loan request. What is my interest rate? Is it fixed or variable? Important, because fixed, you know exactly what you're paying. Variable will fluctuate depending on where the market is. Is there a prepayment penalty for this loan? If you get this loan and you grow exponentially where you have enough money to pay off this loan, will I be penalized for paying this loan off quickly? Part of what I'm going to ask. What are the closing costs for loans? All loans have costs to them. You know, what are the bank costs? What's it going to cost me to be able to do this loan? And that's something to keep in mind, because that's part of the cash flow. If you're taking $10,000 and it's going to cost you $300 and you can take that $10,000 out, you need to account for that. That $300 got to come from somewhere. Are there any financial covenants associated with the loan? Are there specific requirements that need to be met that will hinder you from taking a loan? And then what type of insurance requirements are required? As a business, there's certain insurance that you will need. General liability insurance. If you employ people, you might need workers' compensation insurance. You might need vehicle insurance if you have vehicles. So that's things that you may not think about right now as you're starting a business, but your banker will be able to help you as far as guiding that conversation. And again, as banks, we have resources to be able to assist in finding you someone that may be able to get you a quote, be able to get you more information on that as well too. So I'll stop there on that application ready. Any questions there? Yes.
So the business, the bank will look at on your credit score.
Credit history.
They don't worry about credit line.
They don't, right? As far as, so they look at your credit history. Okay. So one of the key factors is the utilization. Okay, so your credit limits are $10,000. What utilization are you using of that? Are you maxed out? Are you at 50%? That's that's what kind of the factor that plays into the decisioning.
Second one, can you build a business credit limit, credit line, and personal credit line?
You can do both, yeah. Well, so
You have the business, the same you have credit line, your business can have a credit line, personal, separately than you.
they're going to be separate. So remember, when it comes to business, one of the key things is keep your personal and your business separate. There are some situations where you need your personal to be able to get business, but everything else should be kept separately. You should have your personal checking accounts for your personal needs. You should have your business checking accounts for all your business needs. If money needs to be transferred over, that's a distribution from your business to your personal account. That's fine. But everything should be separate. Same thing with personal lines. You have your personal line that you can obtain, and you have a business line that you can obtain. You have a business credit scoring system, which is done in Bradstreet, and you have your personal credit scoring system, which is TransUnion, Equifax, and Experian.
But they're gonna start with you to get start for that.
We will, yeah, regardless.
Building that credit score.
Correct.
For that business.
So regardless of whether or not you're starting up or you've been in business for 10 years, they're still going to look at you,
Okay.
regardless. Other questions? I'm going to kind of hand it over to Christina. We do have a resource, a loan program that we have with Huntington Bank, which she will kind of discuss right now, but it is geared towards our underserved communities and businesses who are looking to, entrepreneurs that are looking to grow as well too. So I will kind of hand it over to her very quickly and hand these out for her as well. I'm sorry, I forgot to ask. I forgot to say that. Yeah, so especially with the questions that are on there, yeah, this will be sent out to my Jeff to, yes.
Christina will get this out to you.
Yes.
Yeah, these are all great questions. Kind of some of the stuff we've tried to cover because it's no matter what, they're gonna look under the hood of you. And I love this because these guys telling you what you need to do when you go in is critical, and all the alternatives to it. Now, and as we said earlier, and we were talking about this downstairs, building that relationship with the local banker is really is critical. And Christine has been doing this for 20 years for our local business, so she's a great resource right here.
Yes, thank you. Yeah, so our Lift Local Business Program is basically our #1 program out there. As Victor had mentioned, there's not a lot of banks that offer startups lending. So this is it. We offer it. Our focus is growing for our minority, women, and veteran-owned businesses, but it's also for our low-income areas as well. So a lot of people do qualify for the Lift Local program that we offer. The great thing about this program is it's offering you as low as $1,000 up to our max, which is $150,000. And that is specifically a term loan, not a line of credit. It's a term loan. And that's specifically for your business. You'll have to come to us with a detailed list of what you're going to need it for. And I'll go over a little bit more of what it entails and what it requires, but there's 0 origination fees. So Huntington's basically taking over all of your fees, your SBA fees. So you don't have to do any of that. And then lower credit requirements is huge on this. And then I know somebody had mentioned bankruptcies, but this program offers 4 years. So if you are you past your 4-year bankruptcy history, then you're golden. You qualify for this. We offer a free financial entrepreneur course. It's absolutely free. That will help you. It's our Operation Hope program that will actually help you build everything that you need to bring to your banker, which is absolutely free. So business plan, your financials, your 3-year financials at the end of the course. This is something that we offer for anybody who's starting off their business absolutely free with Huntington. That course is also on here, and I can always go over a little bit more. I attached my business card to this. And then we offer free businesses with us. Longer payment terms as well. We go up to 10 years for payment plans. So it's huge when it comes to just for startups specifically, because it gives you a little bit more time to pay it. And then we're #1 in SBA lending for Huntington. This is a huge program that we're offering, and it's backed by our SBA program. So business plan is what we would need. Personal financial statement, 1 year of personal taxes, and then your 3-year of projections. That's all we would need to basically get your business going with Huntington, and then offering you this loan. And as you guys mentioned before, we look at credit history, but as you see here, it says low credit scoring requirements is kind of like what we were saying before, kind of like if you're starting off your credit, you have some kind of they're going to look at a little bit of your history. So we obviously want to see that you're making your payments, you're not, having any type of collections or anything like that. So they're going to look at that history more than anything. And so Victor also mentioned our secured credit card. If you're looking to boost that, that is something that we offer. And the minimum is only $250. We hold that as collateral for 7 months. And then as long as they see that you're actively using that card, paying it off on time, they'll, unsecure that card for you. And then they'll even increase your line of credit. So that will build your credit if you're concerned about that. And you can always call on that as well. But we also offer free businesses specifically pertaining to this program. So.
A couple more notes on this one. So our Lift Local loan program has been around for about 4 years now. It was a commitment that the bank made to kind of help our underserved communities, and our underserved communities being our minority businesses, our women-owned businesses, veteran-owned businesses, and any business that's located in a low to moderate area or a minority area as well too. And the commitment was we're gonna reach out to these entrepreneurs, to these business owners, and offer this to them. It's the same SBA loan that any bank would do, but with the perks, the benefits of lower loan amounts, no fees, and more flexible, credit requirements. So it's just more of our way to kind of make sure that we give the opportunity to our underserved communities, and this is what the program does for everybody. Now, on a startup, I mentioned on a typical SBA loan, they want to see skin in the game of 20%. With our program here, if you do have a startup loan and you have project cost under $150,000, we can finance 100% of it. So we don't need a skin in the game with this program. It's a good way to kind of get boosted up and get your business rolling at that point.
Yeah, and I just want to mention too with the Lift Local, it's not just for startups. This is also for existing businesses as well. So if you have something that is existing, you have sales, and you're working with your business and you want to expand, this is something that we can offer for you as well. So
one of the things I kind of utilize as an example is an existing business that's growing, but they're growing too fast, where they probably have too much receivables outstanding. This is a great program where we can utilize the loan for working capital to be able to kind of free up some of that cash flow to get them back a little bit more stronger, so they can continue growing to what they need to be at. So, and I say working capital could be anything from payroll to rents to inventory to utilities to anything that revolves around you working your business. We can look into funding it as well too.
Yeah.
So, questions on that?
I do.
Yeah, right.
I think when you look at a program like this and you look around this room, this is exactly what they're looking for. I mean, we've got even when we had our room full, the first class, this is the kind of loans that are available for people that in our startups, and we have the vast majority of our clients here are women, minority, veteran owned, and it's great to see these kind of programs available, especially when you see the things like, okay, yes, they're more flexible on credit scores. The SB loans are talking about is no skin in the game, and over and over again. I've only been doing this for a year, but I can tell you from 21 years ago, I want to start my business. I'm like, yep, I'm ready to go. I need some money, and they're like, no. And I didn't have $20,000. My whole thing was I needed to finance I needed to live while I built my business. I needed to pay my mortgage and feed my family, and so I needed working capital. I didn't have it, and so this kind of a thing is it's really a lifeline for people starting small businesses, or they have an existing business that needs to grow, which kind of gets me to a second question. You talked about getting a loan for that. If you're growing, you've got outstanding receivables. I can tell you as a business owner, one of my biggest, one of the things that I dislike the most is chasing receivables. People owe me money, or worse yet, they're big companies, and you know what? They're not going to pay me for 45 or 60 days. Well, my mortgage needs to be paid every month. They don't let me go 45 or 60 days. So when you have this kind of because sometimes the money needs to go in and out. Your money's out and you need some money in. This can be another good way to do it. Now, you talked about earlier about factoring, because this is something that's fairly new. I know you guys don't do that, but do you have access to companies who do that? Let's say a small business said, listen, I've got, $10,000 out there in loans, and let's just assume there isn't a program right now for Huntington. Do you have references where you can say, listen, we know this person is available to do this, or could you access,
I personally do not have any.
Okay, I was just wondering,
Yeah.
because sometimes it's like you need it, you don't need to know, you just need to know somebody who knows.
Yeah.
But this would be a program where if you are in that situation, let's say your business is growing and you do have a lot of outstanding receivables and it's a lot of money, but you need the money,
No.
maybe they're with the government and they're not gonna pay it for 45 days, because they're not.
We see a lot daycares that work with the state where they don't
There you
get
go.
paid for a long time. So this helps as far as we can do 3 months of payroll so that they're able to work your business with a loan for 3 months, knowing that your employees are gonna be paid while you're getting paid the money you're getting from the state.
It's fantastic.
It's just another way of kind of,
Even when you're waiting for a grant to come,
even when you're waiting for the grant to come.
yes.
That's awesome.
But when we have the grant approval, we can come to you.
So our programs are for profit only. We will not do not-for-profit with this type of loan. So something to keep in mind, but if you're a for-profit business and you're waiting for a grant to come through, then yes, you can utilize this program in the meantime so they can continue running your business. And then once you get that grant, you pay off the loan.
Does anybody have any other questions outside of
I
it?
have a question, and it probably sounds silly.
No, it's not.
For a personal financial statement, what do you guys look for? Like, is it me bringing in a copy of my mortgage, or what does that even
So
look like?
it's a form that we provide, or that most banks will provide.
A template.
Correct. All you do is just write in, how much cash you have on hand, what accounts you have, stuff like that.
Just assets and liabilities,
Yes.
yeah,
Okay.
and then just the signature. It's
Yeah.
actually very simple.
Yeah, it's a good news. It is something you have to come up with.
Yeah, but-
I'm gonna guess it's about that long.
Yeah, it's very much, but you probably utilize a third of it, so.
Okay, as long as I only have to fill in the blanks.
Yes,
Okay.
yes.
Yeah, I need something for non-profit also.
For not-for-profit, yeah, we do work with not-for-profit, but I'll be very honest, it's very limited,
Yeah, I know.
so,
Done.
we'll get that, Christina, the manager, she's a local manager, so she'll be able to
Yeah.
get the
but we need
resources. I'm
them-
pretty sure I mean, I don't have any information in right now.
No, I don't either, but
When we have a small business, we may help you with our small business.
No. Okay,
It's good to know.
yes, of course.
yes. Yeah, any other questions about like our local program or any outside, like other programs? I mean, we do traditional financing as well as far as our term loans if you didn't qualify for this program, but I mean, it's one of our best out there. And then we do work with lines of credit as well. But keep in mind, as Victor mentioned, lines of credit are a little bit more difficult if you are working with a startup. So yes.
I come from a family of entrepreneurs, so I will say this, as a startup, a lot of times we tend to use our personal credit cards for funding of the business, especially at the beginning of the business itself. Whether it be a personal credit card or business credit card. With our program, as long as you use the credit cards for business purposes, we can refinance it and get you out of those high interest credit card rates
Yeah.
into a more flexible, more better situation, can help the cash flow as well too. So we have that option.
That are starting the business with, then do you have to bring to the meetings or the loans and stuff like that? Like multiple things for like each of
You're
the,
talking about-
so like, let's say
Yeah.
like I
Ownership,
have like
yeah.
myself and my sister.
Mhm.
That were.
You have a
starting
partnership,
business,
yep.
Yeah, like.
So anybody who has 20% more of equity in the business, so this in the situation, say 50/50, then yes, we would, one business plan, one projections, but when it comes to that first financial statement, we would need one for each. And the 3 years of personal tax returns, we would need the 3 for each.
And what is the SBA came through from? What is the main source of SBA? That's from you? From
Those small administration, that's tax dollars we pay. Yes, that's
Yeah,
for the,
it's
that's
being
for
used
the
for
funding.
something useful. What,
Yeah.
who knew?
something useful, yeah.
Yeah.
Very good. I think click on it. I think that's the last one, I think.
Do I just click
Yeah, up, no, wrong button.
this one?
There's an arrow.
There you go.
Yeah, there you go.
And then this just goes over, and,
Oh, yeah,
and the back of your, the back of the flyer, it does have all the same information as far as we need. Jeff does review business plan.
Absolutely.
you
Yeah,
review
they've been kind of working on them. That's part of their homework as they get
Perfect.
through this. And then after the class is over, it's good for you guys in this too. Where this is kind of a new concept for us because now we got more clients. So after the class is over, they're able to then have one-on-one meetings with one of our advisors. And then we'll continue this process of business plan projections, getting them ready so that our whole thing is that when you go, by the time you leave us, you're ready to go see the banker. So you have this stuff ready to go and go to then, when you start talking to them, you're going in prepared. You're bringing the things to the table that they want to see. And then if there's any questions, the good news is that when, as I've said many times, having a personal relationship like they've talked about as well, then it's a discussion. It's not an interrogation. You go in and they'll say, "Oh, you've got 90% of it, but could you bring us this?" And then looking at alternatives because they have a million ways to do this. There's more than one way to accomplish your goals. And having a personal relationship is going to help you do that.
Right.
Because you're running a business, you're going to need money. It does not rain cash, although I've tried many times.
I wish you did.
Yeah.
Perfect.
Okay, anything else?
And you went over the details.
Oh, yeah, the eligibility on this.
You did that already.
Yeah, you do.
Next. You kind of went over that already.
Yeah, I love the no fees part because
Yeah.
a lot of times that's what'll, people say, well, can I, and then you're paying all these fees on top of it. That is so difficult, but
Yeah.
that program, I use this term a lot, unfortunately, it's more idiot proof. You come in and like, yes, if I qualify, I'm going to get the funding I need. There's not fees, there's not more money out of my pocket. I can go do the things I need to do to get my business started without, oh, here's 10,000, but I need 1,000 back because,
That's what our
you got a bunch of
SBA
fees to
fees,
pay.
yeah.
Yeah.
Mhm.
Yes.
Yeah.
And with Huntington, you're just not a small business, you are a big deal to us. So Jeff mentioned it, build a relationship. Christina is the local branch manager in the Shorewood office. I suggest visit her, have a conversation with her. We're all about building relationships, understanding what your goals are and how we can kind of fit into your plan to grow. So I suggest visiting with Christina as well and having a conversation with her.
Yeah, absolutely. Even through email, if you guys want to reach out and we can set up an appointment. I do not mind at all, so.
And I can tell you that Christina is already successfully working with EBC customers, giving them loans and starting their businesses. So this is
Had a couple of referrals from you guys as well.
good. And although it's a beautiful presentation, it's a lot better when there's actually action that takes place.
Right.
And that's the important thing is that they're not just coming in here and telling a story. And then when you get to see them like, oh yeah, well, it said that in the presentation, but in your case, you know what? I saw in 1977, you didn't pay that part. And so that's it. And I love that you talked about the utilization of credit because a lot of people don't, we talked about this before. I've joked about it, but it's true. Somebody gives somebody a $10,000 credit line and then they get angry because they used it. It's like, well, we gave it to me, but no, they don't want. What is the typical? When you guys look at utilization, what would you like to see? What do you usually see, and when do your eyes pop out?
So what do I like to see? 30% utilization.
Okay.
What we'd like to see is 50. What we usually see 70.
Yeah.
Yeah. And when we speak of utilization of credit card debt, it's what's being reported. So a lot of times I have customers that will come and say, "Oh no, well I use my credit card and I pay it off right away as soon as I get the statement." The issue is that when you get the statement, that's the balance that's on the statement is what's being reflected on the credit report. So if you have a $10,000 limit and you're using $9,000 a month and you're waiting for that statement to come out and you pay it right away, well, $9,000 is being reported on the credit report, meaning your utilization is at 90%. So the idea is not to wait for the statement. So if your statement cuts out on the 5th of the month, make that payment on the 4th of the month or the 3rd of the month, so that when the statement cuts out, it cuts out at 0. Now you show nothing.
That's a nice trick. I never,
Yeah.
To your credit?
Hmm?
Like even.
It's a lot. It would reflect a lot, 100% better on your credit scores.
So when it comes to credit scoring, it's very different on a report. They really just have like a green light, red light, and a yellow light, and it's like green that you paid on time. That is it.
And less use.
So they just care about you timely paying. It doesn't matter. They don't even look to see if you pay more than the minimum or less than the minimum. You just have to pay on time.
On time.
So like if it's due on the 15th, then doing it on the 10th or something. So then that way when they're reporting before the.
Yeah, you have to
15th,
do it at before. I believe it's your statement cutoff.
Yeah.
right. So if the
There's a
statement,
statement actual
so if
cutoff.
the statement cutoff is the 18th and your statement's gonna be coming out, if you pay half of it on the 16th,
Yeah.
then when the statement comes out, you're coming in at 50% utilization and not 90.
And that's where
Okay.
that's where they calculate the rating, the credit rating.
Correct.
Mhm.
That's
Okay.
where.
And that's both on the personal side and the business side.
Matter right now.
Oh,
That's
that's
a great tip.
yeah, because we do have a lot of people that use credit cards for the points. I use credit card for points. I mean, I charge it and I pay it off. But I always pay before, so that reflects in my credit report that I owe 0 at the end of the month
That's awesome.
when the statement comes out.
That's a great tip because
Yeah.
many people don't, I didn't know that.
Uh-huh.
You know, I always hate when I pay it off and then they still owe more next month. I'm like,
The
how
due
did
date.
Oh,
You go by
yeah,
the
the
date.
interest that built up on, I'm like,
Me too,
you know,
man. 2 days.
Yeah, then
Only
I'm
go
like,
by
what
2
the-
days.
that happened. So that's great.
That's
That's,
stuff, right?
it is, it's, and it's just the way the world is. So,
Yeah.
but that's a great way to look at it. It would be nice, not that I even when you get a credit card, like you said, a utilization, if it came out every month and it was green, red, and, you were green utilization, yellow utilization, red utilization, just so people can understand that because 99% of us probably don't even know that that's a thing until you find out that your utilization is bad, you're not getting the loan you wanted.
So another thing is,
Corporation of Hopes, do you know if it offers a credit card or credit score course still? It doesn't? Okay.
another thing I was gonna say is, we speak of credit utilization. But if you're carrying credit card debt month over month over month,
Mhm.
you might want to consider consolidating that credit card debt into a term loan. Because as a term loan, it reflects very different on credit than on actual credit cards. So if you're carrying $5,000 every month by month on a credit card and you're just paying it little by little, refinance it into a term loan, debt consolidation. So that you're paying off the credit card. Now you have a 0 balance on that credit card. You still have a term loan that you have to pay month by month, which is you'll probably end up paying off faster than if you were paying minimum payments on the credit card. But that should help your points increase a
If
bit.
your credit card was either a business credit card or a personal card
I'm just talking about just in general.
In general.
Just in
Oh,
general.
okay.
In the personal side, yeah.
on the personal side.
You
So
can
maybe
request
like
that to the credit
what
card.
he's probably talking about
No,
is like
go
a
bank.
personal
Money in the
loan,
bank. Oh, okay.
right?
Personal loans, yeah.
Yeah.
Do a personal loan to pay off the credit card. Mhm.
Okay.
So yeah, you can, basically you're saving a lot more money too on the interest if you have that carry balance, because I think credit cards are what, 25, 26%, so.
So
Yeah.
to go from
Personal
25 to a 10% interest rate, you're saving more than half of the interest right there, right off the bat.
Said what, a term loan?
Yeah, that consolidation term loan, yes. On the personal side, the personal loan.
It's a personal loan essentially,
It's a personal loan. If you come see Christina,
yeah.
she'll give you more information.
We do all of our consumer
Yes.
lending as
Yeah.
well, so.
You actually just
But
teach
these
the classes in high school.
But these are the conversations that you should be
have more
having.
Financial courses, like.
But
Yeah.
these are the conversations you should be
college,
having with your
in my
bankers. I mean, at the end of the day, if your banker's not having this conversation with you,
Yeah.
you should be having this conversation with them because this is the way that they're going to guide you to be able to have better credit, but just utilizing finances better too.
Well, and
Keep in mind, there's some banks that don't offer it either.
Yes.
There are some banks do not offer that personal loan, not even home equity lines.
that's,
So.
well, and the thing that I think, okay, I'll speak for myself here. A lot of people are just scared of the whole money thing, the whole conversation about it, and I'm one of them, I checked my credit score the other day, and honestly, I had my eyes closed because I'm like, I think I'm fine, but I didn't, until I heard some of the thing came up and it was good. I'm like, well, good, but I'm like, there's no reason why it shouldn't have been, but it's one of those things that hangs over your head, and so talking to somebody about it, it's kind of like going to we'll call them a banking therapist. They can kind of knowing and talking to someone and having them tell you know what, don't worry about it. This happens all the time. People do this, like you said, saying that, yeah, we like 20, we see it, you know, you have 50, but we normally see 70 because that's what people do. They go, well, you gave me a $10,000 credit limit. Why wouldn't I use it? Well, because you should.
But use it.
Yeah.
But pay it off before the
Right,
payment
well,
comes out.
pay it off before the bill comes out. Well, that's a great, that's a tip of the day right there. I'll
Absolutely.
put that, I'm gonna put that on the wall downstairs.
Perfect.
All right, thank you guys.
Very good.
Appreciate
If
it.
you have any
Thanks so
questions,
much.
reach out. Please feel free to reach out. You guys business card should be able to help you.
Thanks a
more.
lot.
Yeah.
Excellent.
Very good.
Thank you very much. I appreciate it.
No problem.
Thank you very
Yeah,
much.
appreciate it.
Thank you, Christina.
Yeah.
And she's nearby in Shorewood. That helps. Yeah. Well, and then just, you know, having relationships and having humans that get it is always helpful. Thank you
Yeah.
so much.
Thank you
Appreciate
so
it.
much.
Take care. Have a good night.
Thank you, guys.
Take care.
Good luck with everything.
Thank you.
Right.
In-person banker for 11 years.
Oh, yeah, I know.
Because my ex-husband was in the military, so I have like a military bank.
Mhm.
And I mean, it's always on the phone. They're
Right.
great.
Right.
Don't get me wrong, they're great, but like I haven't had that interaction with an actual banker,
Well-
which I think would make a big difference.
Well, that's what I told them when we met this morning. I know that we're, you know, we're deep into our presentation, but to me, this is the most important part.
Yeah.
And you know, understanding it better, knowing what you're getting yourself into, and honestly, you should. I talked before about starting with the starting with the end in mind. It's also when starting a business, the first thing you should do is talk to the banker. You know, get that business plan together, which obviously we're going to help you with. But even if you just went and saw them first, they tell you, well, here's what you're going to need. Bing, 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 bing. And even if they went and said, well, let's check your credit score, and you go, no, but okay, it's fine. Check it so you know.
What
You know-
about the hot inquiry?
Pardon me?
The hot inquiry, you gotta have it for the next 2 months, 1 year, they say 2 year on the credit score.
Yeah. Yeah. I mean,
When they check it out, always there is a hot inquiry.
yeah, because knowing is you just got to know.
Yeah.
You know, you just got to know.
That way you have a game plan.
Right, have a game plan, you know. I was telling them about a young lady that came in to see me, and you know, she's young, she just got out of school, she wanted to start a business, but she wanted to rent a space and go through all this stuff, and I was just explaining to her, because I feel like more like a dad sometimes, and I wanted to say, no, don't do it, but I can't do that, I'm an advisor now. So we talked about the things, but it's not dissimilar. She's young, so her credit score isn't great, because when I was going to college, as soon as I got there, there was a bunch of kiosks on the quad offering me a credit card. Well, kids walking by and say, "You want $750?" I'm sure, you know. Luckily, I already had been warned about that, but you can get yourself in trouble immediately. So yes, she was young. She needed to work on her credit score. She didn't have a bunch of cash to open a business. Didn't have the startup costs that we have on this page. So we were able to work through that, and she's taken a different approach now, a slower approach. Now she can build up her credit. She can get some money saved. She can start a business renting a space with a friend instead of starting and putting 10 grand into a startup that when she doesn't have any clients to begin with. So they're just having a conversation with another human being. And I've told my son this because I read it in a book one time. Actually, it might have been in a fictional book. A problem shared is a problem halved. So if you're worried about this stuff and you talk to another human about it, all of a sudden you just feel better, you know? And I use that phrase all the time because it's really true. And in this case, you're worried about money. You're worried about your credit. You're worried that something, the world's going to come crashing around your ears over this money problem. Talk to somebody who's a money expert. They're going to go, listen, first of all, calm down. It's going to be all right. We'll figure this out, And if I can't figure it out, and if Huntington couldn't figure it out, we've got a bunch of other bankers you can talk to too. But you can see that these guys have a great approach and a great program, especially for women and minorities and veterans. And that's what we're looking for as entrepreneurs, all of us. I would have been better off having that conversation 21 years ago, but I didn't know. But now I do. So now I can tell you guys. So some of the other things we're talking about today, and we'll walk through some, because when you're starting up, there's a lot of costs involved. Obviously, that's why you got to go see the banker. But office space or storefront, if you're renting a space, it's going to be expensive. As I said earlier, and that's why I talked about getting a commercial realtor involved. It's going to be
I've lowest I've seen is $800 a month, and I've seen obviously $3,000 and higher, depending on how much space you're going to get. So that's a huge startup cost because you're going to need first and last month's rent. You're going to have to build out the thing, and then guess what? You're going to have to fill it. Then you're going to need stuff inside of it. So equipment, inventory, and then as you're going through this startup phase, well, okay, now I've got a space. Well, I'm going to have a phone of some type. Luckily, probably a cell phone. But it's a business, so you really need some kind of a business phone, even if it's another business line. Yes, you need something. You're certainly going to need the internet in that space, And so now you're talking about business internet, more than likely, not inexpensive, but it's going to be a cost. Utilities, yes. Guess what? When you run a space, you got to cool it, you got to heat it, you got to light it. You need hot water, depending on what you're doing in there. And if you're starting a restaurant, need gas for the kitchen, and then back to the equipment thing. We talked about restaurants. It's expensive to build out a kitchen, very expensive to build out a kitchen. And guess what you need in there? Well, you're gonna need all this pots, pans, all the other stuff, and surprisingly, then you also need food to cook. So there's a lot of inventory involved. They talked about insurance. We've talked about insurance. It's critical to have insurance. You just don't want to be in a position where one person, files a lawsuit and you're uninsured and you lose everything. Because not unlike in banking where they're looking at your personal finances, if someone sues you, you don't have your LLC, and you don't have commercial business insurance, they're going to take your stuff. Whatever stuff you have, they're going to get. Back to our talk about attorneys and accountants, but it's a cost. Yes, an accountant's going to cost you something, but I've been doing this for 21 years. My accountant is peanuts on the dollar compared to the basically the peace of mind it gives me knowing that if I have a problem, I can ask them. Not unlike asking a banker about your cash, asking your accountant about your payroll taxes, your taxes at the end of the year, all kinds of questions that come up. They can help answer for really pennies on the dollar. Having an attorney doesn't cost you anything if you don't call them, but having just one, just like we talked with the banker, we have attorneys we can refer you to that work with small businesses. You talk to them when you start up. Maybe you'll never call them again. Now we talked about I know many will do this, but we talked about one. It's a young lady named Phyllis Roman. She said that she'll be someone's registered agent. You have to have a registered agent when you get your LLC, and then I think it's $300 a year. Every year she'll sit down with you for a yearly meeting, talk about everything that's going on in the business. Obviously, because she's your registered agent, she would contact you if there's something involved. But then you can kind of have a yearly little review meeting with an attorney. And if there's nothing more to it, then that's it. There's your $300 for the year. She was your registered agent all year. You had your little chat, and you're done. So you have somebody in your corner if something goes wrong. Because when something goes wrong and now you got to find somebody, that's, again, no relationship. Now you're trying to start over. And then, like, if you need a license or permit for your particular business, those costs can be more or less depending on what you're doing. Restaurants, barbershops, they're going to have professional licenses, obviously. And if you have a restaurant, there's all kinds of permits involved. So, but these costs, you don't really realize what you're getting yourself into until you start adding all these up. And depending on what you're doing, certainly for any kind of a storefront you open, it's going to be into the 5 figures right out of the gate between first and last month's rent, deposits for utilities. Because if you're a new business, guess what? They're probably going to ask for a deposit because they want you running off. So these costs are going to be significant as you go through your business life. Another one, this is one people don't really think about, but there's software costs. So you're starting a business. For accounting software, I would certainly recommend QuickBooks. It'll do everything for you. It'll even do your payroll taxes and stuff if you wanted to. I kind of leave that to my accountant because it's my thing. I want someone to blame. So but you can do it with QuickBooks as well. CRM is customer relationship management. Every industry seems to have a little different thing they can use. Sometimes they have really specific software, like the young lady that started the sewing cafe. That industry had its own software you can buy for scheduling appointments. I know in the hair care and estheticians, they have software they can basically rent that will help them get appointments. So that specific software is stuff that it's a monthly fee though. QuickBooks a monthly fee. All these are monthly fees. So again, that goes on a list of stuff you got to pay for. And then shockingly, wages and taxes. Those are actually, they're expenses. You're paying yourself and you got to pay your taxes every month. So payroll taxes. If you have employees, you have workman's compensation insurance you have to pay. You have to put in Social Security, medical costs. So those are all fees and taxes you need to be aware of going in. Marketing and advertising, we already talked about that. 10% of essentially 10% of everything you're bringing in should be going back out again to draw more business in. So if you're bringing in $5,000 a month, 500 is going out to that. You need to budget for it. This is all those things that are critical, and we don't think about them when we start. I did not. I'll admit that. Marketing research and marketing collateral. And what's that? Well, you just got handed one by Huntington Bank. That's marketing collateral right there. That's a printing cost. So if you're going to be handing out things, whether it's just a business card, which is fine, there's much less marketing collateral now than there used to be in many cases. But depending on your business, you may need that in your store. You may need to mail it out. You may need it for posters. You may need it for something. But the research too, going into this, as you're developing your business plan, trying to understand things, there may be a cost to it. You may have to get a human being involved, but better to have and not need than to need and not have. Website development and social media. We've talked about this before, but you need in this day and age, to look like a real business, you need a website. Now, yes, you can build your own and you can do a fine job. And if you just need a presence, then you're probably fine. But if you need to have search engine optimization, if you need people to find you, if you want people to go, let's talk about a restaurant. I love when I can go on a restaurant's website, see all the menus, and then be able to make my decision. I will admit, because I'm a senior, it makes me nuts when there's no website, and now I have to go start looking for pictures of the menu that someone posted online in order to figure out what I want to eat. And that's assuming it's even recent. Mm-hmm. Mm-hmm.
Where it's you're able to use it and kind of have it like on a Google Doc-ish kind of type of thing, but it's free at first.
Yeah.
So like that, I know, like for me, like for my hair, like that, I feel like it has been almost kind of like a website, but not necessarily. So I'm able to eliminate that cost first.
Yeah, at first. But
to get a website.
But as we talked about, if you do like Squarespace or something, you have very reasonable rates. And if you build it yourself, which again, Chris from our group can help. Again, if you just need a basic website, you can do it yourself. But if you need something where people need to find you, where they search for just a general term, like they don't know the name of your place, they're just searching for, I want the hair salons near me. Well, you want to come up near the top of the hair salons near me, if possible. So then you might need to, Chris can also teach about search engine optimization, but if you want to be number one, or you want to be, then you might need a little help in doing that. Then social media costs. Now, all right, should there be any? Not necessarily. You can have your own Facebook, your own Instagram, other social media things like TikTok. But if you want to grow your business and you want to make sure that someone is posting regularly, that you have your brand perfectly aligned with all of the other things in your life, and you want a professional to do it, there's going to be somewhat of a cost to that. So these are all things you need to at least consider as you're building up. What do they talk about? They want projections. So these are all things that we'll need to go in that at some point. So let me take a quick look here. I said live example. It's a spreadsheet, so it's not that live. Let me go and find this. Sorry, I was so interested in our people this morning that I didn't grab this right away. Nope. So this is again just a general template that we would provide to you for your business. So this is essentially a 12-month template that it has the line items that you can begin to kind of start popping in here. We'll show you one that is also filled in. So at the top here, we've got a product or service. So let's say whatever it is. Let's say that you've got a salon. So one could be hair coloring, one could be cuts, one could be those nice $30 or $40 a can products, which we were talking about hair last night, and I think my wife's going to change again.
You make the lady laugh, Jeff.
Yeah, it's yeah, she's I and this is being taped, so I should probably watch it. But she's displeased. So it is hard. Yeah. Right. Yeah. See, that's just it. Usually that's the hairstylist who does their hair. That's who you want to get. Exactly. It's the cut. Right. And she'll find one and just, this is great. But then the first one's great, the second one's great, the third one, and then by like the 5th or 6th month, she goes, it's not the same anymore. Like they don't remember, they don't, that's like, and I get it. The thing is, because I've had the same haircut for the last, 40 years, it's easier for me. But it's like she knows what she wants, and it's just, I understand. So she's on the move. She's gonna be on the move. But when you get the products and services in that business, there's a lot of stuff. And so you want to get those into your projections, because you want to know where that money's going to come from. Just as I started talking about, because sometimes we overlook the expenses, how much they're going to be, but also sometimes we can even overlook our own income. I was working with a client yesterday who asked me for something, and we're like, ooh, I'm like, that's right. Now we can, there's a product, a service that we provide that we can include in our proposal. That's more income. I like more income. So so obviously you can add rows to this, but this is kind of a generic version. So you're going down through product and services. So your income's on the top of this particular spreadsheet. Then we start talking about the stuff on the bottom. I'm going to scroll down just so you can see more of it. So again, we're assuming in this case you might have rent. If you don't, if you're working from home, great, no rent. Payroll, that's you. Okay, it's okay to have a payroll expense for yourself, but if you have employees, you have to include them. Well, how much are you going to pay? One of the examples, I was just working with a client on this, and then she threw out a number. I think it was $15, $16 an hour. I'm like, okay, yes, but now you're talking about, remember back to your why? Are they going to work for you because they like you and they're willing to work for $15 an hour? Or do you need to pay them 20, even though they love you? You want to make sure that you're basically compensating them for that love a little bit. So you got to make sure what you're paying them is enough. And then it's like, don't forget that payroll expense, depending on what you're doing, might need to be increased, because remember we have paid time off rules now. Well, you have to capture that cost somewhere, even if it's only a fraction of their monthly payroll. You're going to have to capture that cost somehow, because it's going to be a cost to you. Also, when you get into the taxes, I think are down farther. But again, now you're also going to start. You have to then put aside money for payroll taxes, because you still have to put it out. It's a cost. So that's going to have to be, but for payroll, think it through. And now you get 5 employees at $20 an hour. How many hours are they going to work? How many days a week? So all that math is going to have to go into each one of those months to make sure you're capturing it properly. And this is also a thing where you'll get done, and then you kind of sit back and go, okay, is this making sense? Oh, look, I've got myself making $500,000 a year. Unless you've got some really good business, probably might want to knock that back. Now, the one called owner's draw, that's a line item, because you can take out anything you want. It's your money, right? So if you're paying yourself, let's say you're paying yourself $1,000 a week. Well, you want to take a little bit out. Had a good week, want to take some out. You can take some out. It's your money, but then you got to capture it somewhere. Is your draw going to be a little more than just your payroll? So I wouldn't worry that much about that line item at this moment, but certainly you need to think about these things. Employee insurance and compliance. Back to the old insurance thing. You got employees you're going to need insurance for. You need to cover some of their costs when you send this out. Also, your other, if there's any compliance stuff you need. What insurance are you going to be talking about here? Dues and organizations. Well, I joined the chamber. You got to capture that cost somewhere. Even if it's $250 a year and you pay it every June, well, then in this line item, it should be $250 in June for your costs. Any other organizations you might belong to. Maybe there's a salon organization that costs a little money. Maybe there's some other organization you belong to that is an annual cost or a monthly cost, but make sure you capture that somewhere. Then this one, I had bookkeeper and the professional fees, but maybe you have a bookkeeper that takes care of all. You have QuickBooks, but you have somebody else doing it for you. That's fine. If your time is more valuable than what the bookkeeper's time is, then hire somebody. If you're worth, let's say you're a professional and you can make $100 an hour doing whatever it is you do, and you can pay somebody $25 an hour to take care of the books, well, then why would you take $100 an hour out of your potential income to do $25 an hour work if you can have somebody else do it? Is it critical? No. You can do it yourself at night, but again, if you're going to do it, you want to capture that cost somewhere. Same thing with, you've got marketing and advertising, bank and credit card fees. Let's say you got a credit card and it costs you $50 a year. It's a cost. And if you're paying monthly fees for whatever reason, they're just trying to make sure, these line items are just trying to make sure you're capturing all these things. Travel and meals. Now, in my world, I drive around a bit, so my company reimburses me. It's my company, but I still get reimbursed because it's an expense to the company. So whatever so many cents a mile that the IRS allows, that's a travel cost. So that should be captured somewhere. And this meals is more like if the company allows you meals, or this might also be a place where you could capture taking clients out for lunch. If you I take clients out for lunch from time to time, that's a cost. It's got to be paid by somebody. It's being paid by the company in this case. Repairs and maintenance. You've got equipment, it's going to need to be maintained. So even if you think it's all brand new, I don't need anything, I would strongly recommend, because no one does it, put a little bit aside right now for when it does need to be maintained. If you got a new piece of equipment, you start putting $50, you start putting, some amount, I'm sure in your industry, you could find out what that amount should be, either to have an extended warranty or just maintenance in the future. You're putting about $25, $50 a month, and then lo and behold, 5 years later, you need to repair, need to be replaced. The money's there. Then you're scrambling trying to how am I going to replace this dishwasher that's a commercial dishwasher and costs $1,500? Well, the money's already there because you put it in your maintenance and repairs. So you're good. License and permits and taxes, we talked about that. Again, office supplies. Something as simple as, these our little tent nameplates. That's an office expense for us. Pens, paper, ink. Oh my God, ink. Good Lord. Ink. Good, for the love of God. Ink. That's insane. Ink is insane.
What are we gonna do to solve the matter now without buying those expenses?
Well, that's why that not printing things is probably the best thing you can do. I gotta admit, I'm a printer. My business partner's like, why are you printing things? Well, I print invoices so I can match them up with the checks, so I know they got paid. Yes, but I got to pay for the ink, and the ink's insane. It's like liquid gold. Business insurance, we talked about that. Equipment costs, and again, especially in a startup, you might have a ton of equipment costs up front. Maybe less going forward, but you need to capture them. Software and website, we talked about that. Industry-specific software. Now, something as simple as Adobe. I use Adobe in my business for creating documents, for even editing documents. You can't edit anything without full Adobe. That's a monthly fee, for God's sakes. But now I can edit things. And I hate to say this, but suppliers send us documents in like Adobe, and they think that they're safe because they haven't protected them. I can alter those too. I don't, as a matter of course, but if I need to quickly, I will call them and say, listen, you've got the wrong client name in here, or the wrong address, or the wrong this. Is it okay if I edit it? And they'll say, well, yeah, if you can. And I would say half of them don't protect the documents. So then I can edit them and make it better and move on. But again, that's a monthly fee. Microsoft. Anybody got a Microsoft Office?
I got it through Amazon for a promotion.
Did you? Did you get
That was on Thanksgiving.
Did you get is it a monthly fee, or did you actually get a?
They give me in 2025, I think.
Okay.
I'll pay $80.
Yeah.
Thanksgiving Black Friday.
Yeah, that's awesome. Google, nah, I mean, depends what you're doing in Google, but if you're doing Google Ads, yes, that's a cost. QuickBooks, website hosting. If you have a website and somebody's hosting, it's going to be a little something. Same thing. It's always something. And now, like in Squarespace is using Google Suites as part of Squarespace. I got to pay for that too. No, not Square the thing. Squarespace is a web hosting. There's Square the thing that you slide a card through for people to pay you. Then there's Squarespace, which is a web hosting location. But now they are using on their, at least on our website, they're using Google Suite for like email and other stuff. And I get charged a separate fee for that. That's what I said. That same face I made. Why the hell do I need, what? So you just never know what's going to creep up. But I actually added a lot of these just for this. Then utilities, electric, internet, cell phone, garbage. You might have to pay for garbage, depending on where you are. I live in the country. I have to pay for garbage pickup. Water depends on where you are. Maybe it's included in your lease. Maybe it's not. Natural gas, especially if you've got cooking, you're going to have natural gas probably. So you're trying to capture all these costs, and there may be even more depending on your industry, but you want to capture them again on a monthly basis. And don't be shy about putting them in, because if you miss something and your expenses exceed your income because you missed something, that's going to be, your projections are going to be off. Or worse yet, you get approved and now you're running your little business and you're like, oh, I forgot about the $100 a month this, and that's going to make a dent. Now, so this is something you kind of really got to dive into this. Now, as they're alluding to, up here, the income part is really almost the hardest part in some cases, because how am I projecting what my income is going to be? Now, if you've already been running your business, even if you've been running out of your house or as a side hustle, whatever it is, at least you have some idea what income is like. And if you think about scaling it up, okay, well, if I'm doing it part-time, let's say you're cutting hair, okay? I went to some guy in a garage during COVID. I think it was illegal, but so I felt so dirty, I like went down an alley to a garage to get my hair cut. It was kind of exciting, really. So, and it was literally in a garage. I was next to like an engine block, but he had like a whole barber thing with the chair and everything. It was crazy. So, but let's say you've been cutting hair on the weekends, cutting your friend's hair, whatever. So you're making about this much a haircut, and I'm doing this many haircuts a week. Well, if I open a shop, or let's say you're taking the slow route. I'm going to rent a chair I'm going to rent a chair in Bob's place. I'm going to rent a chair for $300 a month or $500 a month. But I know I can scale up my business now. I can go from 10 haircuts a month to 70 haircuts a month. But then I've got to market. So now, great. Now I can work on that income projection because I know what I'm charging for it. Now that I'm out there in the real world, I can probably charge more. Do your research, see what haircuts are going for. Men's haircuts are different than ladies' haircuts, wildly different as it turns out. I won't get into the haircuts again. I'm sorry. But then now you can start working on those realistic projections. And when you have this thing filled in, let's try to grab one that looks like a filled in one. I had one. I know I had one. That's a business plan. Here's one for a real business. So we were looking at projections, operating income, as you can see. So they looked at lunch sales, dinner sales, weekend sales, party rooms, custom cake orders. So it's a little restaurant they're putting together, and they were looking, as you can see, sales grow over time. And they're seasonal because summertime is a little busier. At least they're projecting that. So then out at the end of the year, you're looking at, okay, there's my projected income through December, and then maybe for the year. And then you're looking at salaries, Social Security and Medicaid, food supplies, cleaning supplies, packing, electricity, water and sanitation, natural gas, mortgage, rent. So they're kind of trying to put these things together so that at the end of the year, okay, I've got all my expenses. Look, they're going to make money. Now, in some months, not so much. But that's where you got to step back now and go do the smell test. Does this make sense? From what I know about my business. Now, the projections of expenses are kind of easier. Because if you know those already, and if you've already got, what your mortgage is going to be, You can maybe talk to the previous tenant, or you talk to the, excuse me, you talk to the owner and you kind of know what the costs are there. But the real hard part is up in projections of operating income. What do you think you're going to be making? That's where you need to do the smell test. And then even talking about Huntington Bank, well, there might be made a bunch of money there, but these 2 months kind of slow because it's April and May. Maybe that's just it was just a slow month in that business. Now you got to start thinking about your cash flows. You got some really good cash flow at the beginning and the end, not so much in the middle. So what do you got to do in those really good months? Bury it in the yard somewhere, because you got to get through. Or now it's like, okay, well, wait a minute. Maybe I got to start talk about maybe those working capital loans to get me through these hard times. Especially if I started right here, okay, I had a good month, but I got 2 lean months I got to get through. Well, I have enough working capital. Well, maybe not. But if I have a really good, maybe then you start talking to your banker because they're going to see your projections. They're going to ask you, why are you losing money? Well, you better have an explanation. And that's where kind of living with this document and thinking about the document and going over the document. How is this going to work out? Now, it could easily have been that they went through this whole thing and it turned out this ended up being negative 81,000 instead of positive. Then they're going to go, wait a minute, maybe should I be doing this? And this is where this is a great eye opener for all of us. And that's because you got to know what you're getting yourself into. Am I going to make enough money for this business to be viable? And if I'm not, can I increase it somehow? Or do I need to cut my expenses? Maybe I shouldn't be opening a brick and mortar location right now, because now you can eliminate most of those expenses and you can cut hair. There's nothing wrong with doing business out of your house. I've been doing 21 years. Depends on the business, obviously. But this is always such an eye-opening, sort of refreshing experience, because now I'm getting down to the brass tacks. And don't forget, if you're taking out loans, there's a cost of the loan too that you need to put in there. There's interest costs of these loans, loan repayment that needs to be in there. So, these are just something that, again, this person was kind of putting a stake in the ground, which is fine. But the good news is they had experience in this field. They understood this business. So they knew that there was going to be these peaks and valleys because of the seasonality of the business. So they put it in there. So they were understanding of it. Now, we went over it a few times and I kept trying to poke holes and ask more questions and find out why the seasonality and really let's be honest. Okay, that's a lot of money right there. 20 grand a month and then 67. And I'm like, well, why? Oh, well, they were telling me about it. Okay, that time of year, you're coming into, there's birthday, whatever. They knew that there was parties going on, there was weddings, there was this, there was that. They had an explanation for it. I'm like, and they'd been doing this business as a side hustle and had a lot of customers already. And they knew if they scaled it, what it would be. They had also worked in a restaurant business that in the same community, they knew what the market was like. So they were very confident in these numbers. And so, great, your business, not mine. I'm just there to try to, give that reality check. And that's the same thing you have to do for your own business. So when you're building out your spreadsheet, be realistic. If anything, be conservative. But by conservative, I mean, on your expenses, I would count on more expenses than less. And on the income, I would count on less income than more, because you want to make sure that you're not surprised at the end of the year. You want to make sure that your projections are either in line with what you projected or, that's just like in our home budgets. We want our budgets to be like wild. Like we want to make sure we've accounted for more than enough money in our budgets and not less. We don't want it to be a surprise when, the Christmas, oh my gosh, how did all these bills come in at Christmas times? Because you bought a bunch of presents. That's not a stunner, is it? You're going to have a bill that comes in January that's going to be higher than the one in October because you're buying Christmas presents. Now, ideally, and I do mean ideally, but back in the day when I worked for a big company, they actually had a Christmas, like a Christmas savings plan. They would take it right out of our checks. And then we would save all year, and then in November, beginning of November, they mail us our Christmas check. Because we save money all year, and now we got money to go buy presents, and I put it on credit cards. That is awesome, isn't it? Yeah. I should do that. I didn't. But it was great because at the beginning they would say, okay, hey, time for you want to do your Christmas fund, you want to get started on the Christmas fund, just how much you want to take out of your check, and then right here, and then we'll send you a check at the end of the year. It was wonderful. But that's the same thing you got to do here. You got to be thinking about those things. When are your big expenses? When is your big income period? You know, do you have a lot of haircuts? Let's say you're in a salon business. Okay, it's prom season. Do you get a lot more business then? You know, girls getting their hair done, makeup, nails, eyebrows. I don't know. I guess an esthetician, you're getting, you know, people are getting their Botoxed and lip plumps or whatever. Whatever it is they do. But that's the kind of thing you got to really need to take a breather. You know, in my world, I'm riding a lawnmower. I think about this stuff, not lip pumping, but about, you know, think about business when I'm riding a lawnmower, because it's kind of it's almost cathartic. You know, or let's say as if you meditate, which is also wonderful. Don't think about it during meditation, but it kind of clears your mind so that when you're done, you can maybe you can tackle a couple of problems because your mind now is relaxed and clear and you're ready to think about things. And then you go back at this, then come back again. Look at it, come back again. Did I capture everything here? Have I gotten everything down is everything on here down to cotton balls? You know, what about towels for my salon? How many towels do I need? Where am I going to wash them? Do I need to get a washer and dryer? You know, just keep doing a reality check and checking yourself and back again and back again. Because at the end of the day, the projections are yours. Now the banker, well, they may question them as well. But if you've thought this all through, you're going to have the answers. Because the interview they talked about, it's an interview, but it's really a conversation. Because when you think about what they're doing, they're asking you because, especially in smaller community banks, when that banker takes all your stuff, it doesn't go into the HAL 3000 to get an answer. They're going to the loan committee, and the loan committee is a bunch of human beings, and they want to hear the story. They want to hear your story, and your story is only as good as the story you told. In this case, Christina. Okay, she's going to go tell your story, and she's going to sell you to the loan committee, and she's going to sell your projections to the loan committee. Now, yes, your financials are your financials. You can't do anything about those. Let's just say that whatever that point in time is, your financials are your financials. Now, on the other hand, your business plan and your projections are yours. And if your banker is comfortable with them and knows your story and is ready to take that to the loan committee, that's your story's going with them. You're counting on them to be your advocate in the loan committee. So make sure it feels good to you. Make sure it's right, you know, because you don't want to create something out of whole cloth that isn't really realistic and somehow slip it past the banker, and now you actually have to cash that check your mouth wrote. You don't want to be in that position. That's scary. That's scary. But if you go in there and you've been conservative in your estimates, and in month one you said you might make 5,000, you made 6,500 or 7,000, well, and your expenses were right on, you're making more money now. And even if you were right, and yeah, you know what? My projections are holding true. And now I know that, yes, I had money in marketing and I've already started that. I've prepared. I'm ready. I got stuff going on. That's the best feeling in the world. You don't want to have that white knuckle experience. And so this will help you do that. But it's time consuming. It's a process, but it's well worth it. Better to, you know, being prepared is much better than not.
No.
You know, it's not a perfect science. Let's go back over here. Whoops. I did something wrong. Sorry, we're trying to, something went wrong. Yeah, thank you. Yeah. Let's go back out of this one and start over again. Sorry. Canva's unhappy. Or the internet's unhappy, or both. Oh, while I was thinking about that, any questions so far? We only got a couple of minutes left anyway. The numbers are intimidating. They are intimidating. We're getting closer. Now, I'm gonna kind of jump later on a little bit because I was gonna go through balance sheets and stuff, but for the moment, let's go back to this again. I don't know, it won't let me. I don't know why. But we talked about this before, is that the whole notion of establishing business credit. I know it's very tiny here, but back to the bankers. You're going to be going in with your personal credit. So understand it. It's frightening. It really is. I'm not kidding. I mean, I looked at mine the other day and I'm thinking it's got to be really good, right? It's got to be okay. But, you think back like, okay, did I miss that payment to the dentist or, one thing you guys were, I'm sure are aware of this, but a lot of times people get in trouble because of medical bills. They have a medical issue, and now these days with medical expenses, it's insane. So they get in trouble because they've got they had something went wrong, and now they've got thousands of dollars in medical bills that they got behind on. Well, now medical bills cannot be part of your credit.
Yes, they take it out.
So, which is fantastic. So that'll help a lot of people. But if you have credit issues, there are resources. Now, I know that maybe if Huntington doesn't, we can find out. That's when sometimes you need help. You need help. Establishing a business credit line. We talked about that a little bit, but once you have once you have your business, and as Victor was saying, they have credit cards available. It's a great idea to get the credit card, charge something, pay it off, charge it, pay it off, because then it builds your business credit up. Yes, it takes 2 years for you to be like a real business, but as you're doing that and you're building your business credit, when that day comes, you're going to go, yeah, that person exists and they have a credit history, and they've been buying things and paying it off and buying things and paying it off. One of the things they talk about here, is it happy yet? Oh, it's happy now. There we go. A Dunn's number is that Dun and Bradstreet kind of a number. That's something that can be established for you. Obviously, getting your EIN, get a bank account, opening an account with your suppliers. Now, I gotta admit, I hadn't thought about this when this is one that Priscilla shared with me. So you're buying stuff, right? You're buying. Let's say you have a restaurant. You're buying food from a food purveyor. There's no reason not to establish credit with them. Okay, I'm buying food from you this month. I'm going to sell it and I'll pay you next month. But then you're establishing business credit, because especially if they report you to reporting agencies and you're buying, paying. Again, building up your credit score. And I know especially a lot of people is like, well, no, I'm just going to pay in cash. I understand that. Nobody wants to get a big credit bill but then you're not building your business credit. So it's better to kind of actually take some loans out and pay them off than not. And even if it's this with a supplier. And again, the business credit card, I will admit that was one of our, as in our business, we just right away, we started paying cash essentially. And we should have built up business credit. We haven't needed it, but better to have and not need than need and not have. So it's not a bad thing, but you got to make sure you pay it off. It just like he was saying about if you have a credit card bill, get a term loan and pay off the credit card. That's a great idea, but don't run the credit card up again, because then you got a term loan and a credit card bill. But it's hard. It's hard to do. It's hard to do. Life isn't that simple. We didn't all win the lottery. We weren't all born on third base. In the wealthy life. We're not JB Pritzker, who seems like a nice enough man, but he was born with a bunch of money. 99.999% of us were not. So this is the stuff we have to do to live our lives. So we already talked about financing. I'm not going to go through that again, and these guys did a great job. Mike, the microloan thing you don't think about, but you need $1,000. You need $1,000, and that's available too. Al, we talked about. Is this on the next page? Allies for Community Banking. He talked about ACO. There are little tiny lenders like that. They're not banks. For whatever reason, if the bank can't give you money, there are other options out there. Are there 1,000 of them? No, but again, you keep beating on that door, and there might be enough. You're not going to be able to start a business, a brick and mortar business, and order all your stuff on a microloan. No, but while you're running your business, stuff happens sometimes, and you need to access some other loans. But I think they did a great job of talking about these things. Are there some grants available? Yes. Can you rely on them to start your business? No, but there might be some available to help you get the business, even here in Joliet City Center, if you only start a business down here and you build out your business, they can be reimbursements for building out the business. There can be built reimbursements if you put a nice sign up. So there's some money available, but it can't be like people will come in and say, I want to start a business and I want a grant. Well, you can't start a business on a grant typically. I mean, yes, there are exceptions, but overwhelmingly just a typical small business. No, you're going to start the business on the back of your personal credit, overwhelmingly, or investors or family or friends, or like Victor's saying, comes from a history of entrepreneurs. They may all be able to, if he was starting a business, they might all be willing to invest in him because that's how they got started. Their friends and family help them. Crowdfunding. GoFundMe and others. Yeah. Crowdfunding is another way to do it, especially if you make a compelling story on those. Somebody might say, I'll give you $20. Good luck, and that's how it works. Crowdfunding is just that. It's a crowdfunding, which isn't a bad idea either. I've always wanted to start a restaurant, and here's my food, and if I could just get this started, I can help my family. Somebody go, yeah, here's $20. Here's $1,000. A true angel investor that gives you money and doesn't want to return. So you never know. You never know. I guess take us back to our usual. Obviously, when this is our last class. Certainly, you can reach out to us to schedule a one-on-one appointment with one of our advisors. It'll be me or Brian or Katina. We're actually bringing on another advisor soon. But the fact that you guys have already seen this, it'll cut the meeting times down considerably because you've already heard all the startup stuff and you're already working on business plans. And now you're already thinking about your income and expenses, and now you can just let that just marinate for a while. But that's where you're going to have to go. And as Victor said, when you go to get money, they're going to need all this stuff anyway. And really the thinking, the pondering, and then talking to someone about it will help really draw all that out. A lot of the stuff we do is really that notion of working together that kind of to bounce ideas off of each other. You tell us what you think, we'll tell you what we think, and hopefully we can help you get that thing up and running sooner rather than later. Go ahead.
Yes, after thanking you so much for this.
Oh, you're welcome.
Even the class today is so exceptional, but in the bottom, when you say that's for non-profit, that's where I'm a little bit.
Well, yeah, and that's where you specifically, you'll need some, you're going to need, and we have not-for-profit people we can reach on. He's got a specific issue because he's a not-for-profit.
Yes.
And the good news is, in the old JJC SBDC that was funded by the SBA, we could not work we could not even help a not-for-profit. We cannot help a student, and we're doing both now. Now, is it perfect? No, but at least we can help. We can start.
Information.
We can get information. We can hopefully hook him up with people that can give the information he needs, and we couldn't do it before.
But to be honest, Jeff, I learned a lot. I never know about it. This class, 80% that I learned.
Awesome.
90% is so, and I will take a lot of action in consideration.
Excellent. And honestly, I learn stuff every time I go through one of these, either from you guys or from another presenter that comes in. Like his little tip about pay it off before your credit card statement ever comes out. I didn't know that. And that's a genius idea. If you're going to pay it off anyway, pay it off 2 days early, and now it comes out as a zero balance, and you look like a genius. And at 64 years old, I would love to look like a genius, finally. So thank you all so much. Certainly, if you want to have one-on-one advising, reach out to us. We'll get this information back out to you. And those that are online, same thing. Reach out to us, and we can begin the one-on-one advising piece of this journey. Okay.
So you will, you're gonna. Last time we talked about you're gonna send me some information, or maybe you hook me or someone I can sit down for.
You know what? Sign up for the advising, and then that'll be a better place for us to do this together.
Well, I gotta go back online and sign up.
Yeah, and you can. I'll ask Fatina to send the link out to sign up. I know that Patricia's already done it. But also right on our JJC EBC website on the JJC, the link's there too, where you can sign up. It's basically it's a new client form. You can see in the pipeline, and then we can get a meeting scheduled with Brian or Fatina or myself and. No, we were working on it this morning. No, there was a disturbance in the forest, and we didn't get that one out yet. But I was working with Chris Griffin this morning to get that one out, and I was I was forced to listen to my own voice too, so that was awful.
Yep, thank you so
All
much.
right, you're welcome, guys.